consumer growth fund Venturi Partners has announced the first close of its second fund at $150 million, which is going to back high-growth consumer brands across India and Southeast Asia. It is targeting a corpus of $225 million by June of next year and will back disruptive, purpose-driven brands across these markets that are positioned to benefit from structural tailwinds, including rising consumer spending and favorable demographics. It is going to make initial investments of $15 to $40 million. For more on this and their investment thesis, I have with me Rishika Chandan, the managing partner of Venturi Partners. Rishika, thanks so much for your time here on CNBC-TV18. Venture capital fundraising is picking up after a bit of a lull in India. Start by telling us, of course, about your investment thesis and what really got your investors to commit this $150 million.
That means that we typically invest in companies from Series B to Series D. Check sizes ranging from $15 to $40 million. And we invest only in consumer brands across different subsegments in India and Southeast Asia. I would say 70% India and up to 30% in Southeast Asia. In terms of why investors have sort of supported us again with respect to Fund 2, I think the reason is a couple of things. One is India and Southeast Asia together are about 30% of the world's population and therefore consumer markets. These are also markets that are growing at the fastest clip when you compare it to other geographies. And then that coupled with the fact that, just the average consumer age in India and Southeast Asia ranges anywhere from 25 to 29 years. These markets are just ripe for disruption of brands. Most sort of segments that you look at across, are largely unorganized. And given the rising awareness and digital exposure that consumers have, they all want brands, and there just isn't enough availability of those in these markets. And I think our investors recognize that. Also, our Fund 1 portfolio, has been doing very well.
Well, Venturi is emphasizing this purpose-driven brand and structural consumer tailwinds, but what really defines this purpose-driven brand in your investment lens, and what kind of returns will that translate into?
Yeah, so when we say purpose-driven brands, right, what we mean is really brands that do good for the consumer, either by giving them a better product or service for the same price point, or being able to deliver more value to the customer. So, for example, we have an investment in Southeast Asia, which is a hard discounter, whose mandate is to really be able to offer consumers the same products that they would buy from any other retail outlet at probably 30-40% cheaper. In terms of returns, I would say because we're a growth investor, we look for returns from anywhere from, call it 2.5 to 4 times MOIC on our capital.
So your plan is that the Fund 2 is going to invest $15 to $40 million across 10 companies. What are these 10 companies? How soon are you going to start investing? Have you already identified some?
Absolutely. So we're actually close to investing in one company. I think we should announce that in, call it the next week or 2 weeks. And we're already in term sheet stage on our second investment from Fund 2. So we've definitely started deploying. We continue to look actively at different sectors in India, whether it's ranging from elderly care, pet care, new food and beverage products and services, so on and so forth.
Okay, so no names there, but the final close of $225 million by June, is that on track? And could you exceed this amount too?
Yeah, look, in terms of timeline, we expect to get to the final close of 225, like you said, by June 26. We have a hard cap of 250. Now, whether we get to that or not is really a function of where the markets are. And you're more than aware of the volatility, but we feel very confident to get to at least $225 million.
You also mentioned a 1:1 co-investment option alongside Fund 2. Now, how does this structure really benefit LPs and founders, and how does it give Venturi an edge when it comes to winning deals?
Yeah. So look, from Venturi's perspective, right, it gives us a lot of flexibility in check size. And that's why I said $15 to $40 million, because the fund can invest up to $20 million. And the balance comes through our co-investment pool. So the advantage of that is that not only can we get access to better and high quality growth companies and lead rounds, but we also always necessarily need a board seat. And sometimes you need to get to the $40-50 million check size to get to a board seat. So that is how we sort of, can help founders by just being able to have flexibility on check size, do more follow-on rounds. From an LP's perspective, right, if you think about the co-investment pool, the 1:1 allows them to also directly access the company if they feel that it is in a space that is directly relevant to them. There are also more favorable economics on the co-investment side. And when you club that together with the fund, effectively, it means lower management fees for them.